away from a bold move, has shaken things up again. He signed an executive order targeting Chinese companies listed on US stock exchanges. This isn't just some bureaucratic shuffle, it's a major power play with huge implications. The goal, to pressure China on issues like financial transparency and regulatory compliance. The US government has long accused some Chinese companies of playing fast and loose with their accounting practices. They argue that this lack of transparency puts American investors at risk. This move didn't come out of nowhere. Tensions between the US and China have been simmering for years, fueled by trade disputes, technological competition, and geopolitical rivalry. Trump's executive order throws another log on the fire, escalating the economic standoff between the world's two largest economies. So buckle up, because this story is far from over. The coming months will reveal how China responds, how global markets adapt, and ultimately who comes out on top in this high-stakes game of financial chicken. Trump's executive order doesn't target small fry. We're talking about some of China's biggest corporate heavyweights. Think Alibaba, the e-commerce giant that rivals Amazon. Think Baidu, China's answer to Google. Think JD.com, a massive online retailer. These companies and many others, over 200 in total, are now in the crosshairs. And these aren't just any companies. They represent trillions of dollars in market value. Their stocks are held by institutional investors, pension funds, and yes, even regular folks with retirement accounts. The potential fallout from this delisting could be enormous, affecting not just Wall Street, but Main Street too. The impact on these companies is already being felt. Their stock prices have taken a hit, and investors are understandably nervous. The uncertainty surrounding their future on US exchanges has injected a dose of volatility into the market. No one likes uncertainty, especially when it comes to their hard-earned money. This situation is a stark reminder that the global economy is tightly interconnected. What happens in Washington doesn't stay in Washington, it reverberates across the world, impacting businesses and investors from New York to Beijing and beyond. The initial shockwaves from Trump's executive order have sent tremors through the financial world. Markets hate uncertainty, and this move has injected a hefty dose of it. The immediate reaction? Stock prices of the targeted Chinese companies tumbled. It's not just the Chinese companies feeling the heat. American investors who hold these stocks are understandably concerned. Will they be forced to sell at a loss? What will this mean for their portfolios? These are questions that financial advisors are grappling with as they try to reassure clients and chart a course through this turbulent market. Adding fuel to the fire is the legal and regulatory maze surrounding this delisting. The executive order itself is facing legal challenges, with critics arguing that it oversteps presidential authority. If successful, these challenges could delay or even derail the delisting process. The big question is whether this is just a bargaining chip in the ongoing US-China trade war, or a sign of a more permanent decoupling between the world's two largest economies. The answer will have profound implications for investors, businesses, and the global economy as a whole. So, what does the future hold? That's the million-dollar question, and right now nobody has a crystal ball. One thing's for sure, this is a high-stakes game of financial chess with both sides maneuvering for advantage. China isn't likely to take this lying down. They've already condemned the executive order and could retaliate with measures of their own. This could involve targeting US companies operating in China, manipulating their currency or other economic countermeasures. In the meantime, the affected Chinese companies aren't sitting idle. They're exploring their options, which include everything from fighting the delisting in court to seeking alternative listings on exchanges in Hong Kong, London, or elsewhere. For investors, this situation underscores the importance of diversification. Don't put all your eggs in one basket, especially one as volatile as the Chinese market right now. Spreading your investments across different asset classes, sectors, and geographies can help mitigate risk. The long-term impact of Trump's executive order remains to be seen. It could accelerate the decoupling of the US and Chinese economies, leading to a more fragmented and less predictable global market. Or it could be a wake-up call that forces both sides to address the underlying issues and find a more sustainable path forward. Only time will tell. Don't miss out on our latest updates. Subscribe to our channel and hit the bell icon to stay informed. Follow us on social media for more insights and breaking news. With the global market landscape constantly shifting, staying informed is more crucial than ever. We bring you the latest developments, expert analyses, and in-depth coverage to help you navigate these turbulent times. Stay tuned, stay informed, and stay ahead of the curve.